Profit for any business can be calculated by a simple formula: profit equals sales minus cost. Farm managers know the profitability of their entire business from their income tax records at the end of the year. However, because most farmers produce many different crops, they often do not know which crops are making money, which ones are losing money, and of those making money, which are making the most money. The process of assigning production costs to each crop and subsequently calculating the profit of each crop is called cost accounting. You can use cost accounting to analyze various production, financial, and marketing strategies. The tools you need for cost accounting are an income statement, production data, pencil and paper or a spreadsheet like the Rutgers Cost Accounting for indoor and outdoor plants, and a desire to determine the most profitable crops. Cost accounting begins with cost information typically found on your income statement. The next step is to gather production information for each crop. Information that you need is the number of units started, the space devoted to each unit, the number of weeks each crop is in the greenhouse or field, the percent sold, and the sales price per unit. You also need variable costs such as labor, seeds or plants, fertilizer, chemicals, other direct costs, and the number of unsold plants. These are items that most managers know for each crop. Once you've gathered this information, allocate as many of these operating or variable costs as possible to individual crops. You can treat variable costs that you cannot allocate to a particular crop the same way that you treat unallocated overhead costs. Add them to unallocated costs and assign them to each crop on a per square foot per week basis for greenhouse crops and on a per acre basis for field crops. You can add these overhead costs to the previously assigned variable cost to calculate the profit or loss for each crop and the profit or loss for each unit, such as flat or pot in the case of greenhouses, acre or other measure for field crops. You can also calculate the total cost per crop, the profit or loss per unit, acre or pounds of production. You can use cost accounting to look back at your previous year's crops and see which crops make the most profit. You can also use it to look at potential new crops. Cost accounting allows you to do what-if planning on paper instead of making bigger, real mistakes in the greenhouse or field.